Hello and welcome to Trading 5 Talents. In today's video, I want to give the final results and my conclusion for this tri-weekly iron condor strategy, which in my update video, I just named it the 41 strategy, but I'm going to sort of clarify it a little bit. It's going to be called the 41-2 strategy, and you'll see why in just a second. But just to recap, the 41-2 Iron Condor strategy is a tri-weekly Iron Condor strategy that I was testing out on SPY. So I was I was selling a Condor on Monday for Wednesday's expiration, selling one on Wednesday for Friday's expiration, and then selling one on Friday for the next Monday's expiration. So every 2 days, basically, I was selling an Iron Condor, and this is the way it was set up. So at the bottom, you can see on the call side, so this is the green side, I was looking for a 40 delta, which gave me approximately a 60% chance of profit that the price of SPY would be below my short call. And then on the put side, I was doing the same thing. I was looking for approximately a 40 delta, which means that the price of SPY was approximately 60% of the time would be above my short put. So again, a 60% chance of profit for that put side. So if we take all this together, that means the price of SPY by expiration is going to be somewhere between my short call and my short put. And based on these percentages and based on the deltas, that means this strategy roughly had a 20% chance of profit, basically 20% chance that SPY would be in between my short strikes. And we calculated this by taking 100% of the price distribution, subtracting the 40% of the call side, subtracting 40% of the put side. So 100 minus 40 left 20% chance of profit. So that's how I was setting it up. That's how I was choosing my strikes. And then on each side, the long option was one strike further out of the money than the short option. So this is why I called it the 41-2. 40 delta, one strike width, 2 days until expiration. All right. So how did it perform? So here you see all these different boxes, and each box represents an Iron Condor on SPY. So, for example, if we start on the left-hand side, you can see this box is shaded green because I was profitable on that trade. The ones that are shaded in red are the ones that I lost money on that trade. And I went through some of this in my update video, but here are all the final results. So 10 trades in a row. You can see that 4 of them I won, or at least I made money, and then 6 of them I lost money. And the boxes represent when I entered the trade. So that would be the left-hand side of each box. The upper short strike, or the call strike on the top side would be the top of the box. And then the short put strike would be the bottom of the box. And then expiration is the right-hand side of each box. So each one does represent the date and the price of the Iron Condor. And you can see how many times the price moved out of the range that I anticipated, at least this strategy anticipated SPY to move. So it's not a high chance of winning, and I guess that's the premise of the 40 deltas. It's not going to win quite frequently, but the idea was trade management would make it profitable, in which I would either win $60 or get stopped out at $20 in loss. So I only had to be right 25% of the time, ideally, to break even. So anything more than that would be better. But if there's only a 20% chance of winning, then this strategy probably wouldn't work out too well. So here are, the graphical layouts of this Iron Condor strategy. Let me show you what the actual numbers look like. Okay, so here's a spreadsheet that I made for this particular strategy. So you can see it's the 41-2 Iron Condor strategy. That means 40 delta, one strike with 2 days until expiration. And the idea of winning here is this risk to reward ratio, risking $20 to make $60. So all of my trades are down here in each of these rows. Then the profits and losses get plotted on this graph on the top. Up here in the upper left is just sort of a summary. So if we look down here, first of all, my expected win rate is 20%. All right, so that's because of the 40 deltas on each side. So if I'm either winning $60 or losing $20 at a 20% win rate, out of 10 trades, I should have won $120 in an ideal scenario. All right. My actual profit and loss is only $27, and my win rate, and we have to put a, sort of an asterisk by this, it says it's 40. And that just means I actually made money on 40% of the trades, or 4 out of 10 of the trades. And those were the green boxes in the previous candlestick chart. All right, so all the strikes are listed here. My entry price, you can see I was entering for about $70 in credit per Iron Condor. This is the close of SPY, and this is the exit prices and either my profit or loss. And so I have some notes over here. For example, with Robinhood, at 3 p.m., if one of your spreads is threatening to expire in the money or potentially have an assignment risk, then it's going to auto close it. And so I listed that here. Here I got stopped out because it reached 90 cents, which would have been, $20 loss. In this case, it was $19 loss because I actually entered it for $70 in credit. Here I couldn't close it, and it just expired at $1 because that's the width of the strike. So I lost the maximum, which is $26. Stopped out again because it hit 90 cents. So, and then again down here, somewhere auto closed. Here, a profit target was actually hit. This was the first time. Now, the ones that are colored here in this sort of orange color, if you look over here, these are paper traded. So these first 5, I used my actual money. But you can see I won, lost. And so I decided I'm just going to paper trade the rest of these because I don't think this is going to be a very good strategy. So I paper traded the last 5, and the results were lose, win, and then lose. So $27 in total profit. Now, if you look here, this is pretty interesting. The closing price of SPY at expiration for each of these Iron Condors, you notice 2 of them are green. That means SPY closed in between the short strikes. So in this case, 356.79 was between 356 and 361. Here, 357.68, that was between 355 and 362. So if these were allowed to go to expiration completely, these would have actually maintained the full profit. So 2 out of 10 actually closed within the range, which is the expected win rate, 2 out of 10, 20%. But because of Robinhood's auto close, it really skews the results. And overall, I don't feel this was a good approach to this Iron Condor strategy. So with that said, here are my final conclusions for this Iron Condor strategy. So the overall conclusion is that this is just not a viable strategy. It doesn't mean Iron Condors aren't profitable. It's just the way that this is set up and the way that this is managed is not a good strategy. So the profit range is too narrow. And if you notice the short strikes, there were only 4 or 5 strike widths in the center. So that was a very narrow profit range, and SPY was just moving way too much to make this a really good profitable strategy. The early closeout by Robinhood really does skew the results. If you're using a different broker that doesn't have that, maybe your results might have been a little bit better, but then you also run the risk of assignment, which could be really bad. So overall, that's not a good thing. The risk to reward ratio, I wanted to risk $20 and then possibly make $60, so I didn't have to win as much. However, the expectation of that, as you saw on my small data set of backtesting, that did not meet what actually happened. So the expectation was not the same as reality. There are many times I couldn't close, the many times that I got auto closed, so I wasn't able to get those risk to reward ratio targets that I initially intended to get. Also, because this only has a 20% win rate, you're going to have a lot of consistent losses in using this strategy. And for trading psychology, that's not a good thing if you have many, many losses and then only a few wins. Even if those wins are really good, just having all of that red is just not good for traders. And I'm speaking in, personally, I don't like to see a lot of losses. I would rather see a lot of little wins than tiny losses and then big gains. So with all that said, this is not a viable strategy, but I do have a variation of it that I'll be introducing in just a little bit. So the next iteration of this Iron Condor strategy is in my opinion, a very viable strategy, and I want to continue to look at it and improve upon it to get something extremely consistent and to be able to share with all of you. So if you want to learn about that strategy in the next few days or so, then go ahead and click on the subscribe button and turn on the notifications so you can know when that video comes out. In the meantime, if you have any questions, please leave a comment down below or catch me on Twitter at Trading5Talents. Until next time, trade wisely and take care.